Well, amidst all the chaos in the market, one sector that's doing quite well is the auto space. Just wanted to point out a couple of charts for you. Mahindra CIE is one stock that's really charging away. In fact, the stock is up 50% in the last 6 months alone. And ever since the board of Mahindra CIE expressed its intent to sell off the company's less profitable European business truck forging arm, that's when the stock started to rally. So that's one of them. CEAT comes out with its numbers later in the afternoon. CEAT is also surging, expected to be a good set of numbers because the raw material basket has cooled off quite a bit, both crude and rubber prices. So CEAT is the other stock that's at the high point right now, I think. Sona BLW, we had a chat with the management, a very positive commentary. 25 to 30% revenue growth is what they're looking at in FY24, and big opportunities in the electric vehicle space. And TVS Motor, of course, from the frontliners has been a big mover on the back of strong management guidance. But as promised, let's get you the opinion from Pidilite. It reported a weak Q3 on the back of a high base. Profits after tax was down 14%. Margins have contracted as well. Earlier, in fact, Mangalam caught up with Bharat Puri. The MD of Pidilite began by asking him about how the quarter was and how they see growth going ahead. Listen in.
See, my invitation to you is firstly a simple direct answer to your question. No, actually for us, Q3 has been as per expectations. And I'll tell you why. Last year, as we've said also in our press release, Q3 was a big quarter for us because we've taken very significant pricing actually twice in the quarter, once in the beginning of November and once on the 1st of Jan. As a result of which, obviously, the trade had stocked up highly, inventory in trade had gone up substantially, and we had had a very good quarter. In fact, if I recall, we had grown by about 25%. Now, in that context, when we were planning, obviously, if you remember last year at the end of Q4, you were asking me, is Q4 a little depressed? And at that time, I told you, please look at Q3 plus Q4. My simple invitation to you would this time also would be look at Q3 plus Q4, because obviously this time we have not had that kind of inventory build up. Simply because obviously there is, right now prices are stable and therefore there is no need for the trade to stock up. The other thing I would draw your attention to is two things. One is if I look at my CAGRs, even over these high bases, over a 3-year period, we have very healthy value and volume CAGRs. If I look at the 9 months, we're growing at about 23, 24%. Our, again, volumes are extremely healthy. So to my mind, this quarter, and obviously you're always going to have quarters where you're going to have at times depressed primary sales. But when I look at our secondary sales, frankly, it's as per expectation. I mean, if I was to tell you what is the only headwind, I would still say that rural and semi-urban demand is still strained. We are still to see the recovery in rural and semi-urban. But here also, I must add that as far as we're concerned, unlike, say, FMCG, we're not declining or constant in rural. Our growth rates, which used to traditionally be 1.5 times urban, are now near about urban or actually a little lower than urban, and that's the matter of concern. We believe, slowly that is now bottoming out, and starting Jan, hopefully we will see better rural and semi-urban demand. But at an overall level, frankly, as we've said in our price increase, we say we're increasingly optimistic, and you always ask me, why do you say cautiously optimistic? So this time we're increasingly optimistic, and that's really because of two big things. One is from a raw material situation, we're very comfortable. We've seen through most of our high-priced inventory, VAM remains now at about $1,200 a ton against $2,500 a ton a year ago. We're also seeing good construction activity, good demand conditions, especially in urban India and T1, T2, Tier 3 towns. That continues. And therefore, if with the return of rural and semi-urban, I think we will be really in a good shape. So that's why we're saying we're increasingly optimistic, because internally we believe the worst of raw materials is behind us. We will slowly return to our normal margin range, and we remain optimistic on demand also in rural and semi-urban coming back. We don't have any complaints about urban demand as of now.
Would you say it's been a little longer than you expected for your margins to come back to normal levels? I mean, currently, if I look at it, 16.5% is still way below the 20-24% band that you have. And earlier when we spoke, you said that 20-24%, which is the normalized band that you have on an annual basis, will come by from the fourth quarter. Should we still believe that's on the cards? And is all the high price inventory out of the system? Is all the inventory at the dealers end out of the system now?
See, a large part of the high-priced inventory has been consumed. There will be still some that will get consumed in Q1. Exit March, you will definitely see us in the range that we've always indicated. That appears quite imminent. Barring no other black swan events, no other oil price shocks, Russia, Ukraine's, COVIDs, etc. Frankly, I think the first quarter of the next year will see us in our traditional margin range. Our focus, therefore, has to be on positive volume growth. And to answer your question, yes, I mean, this has probably been the perfect storm from a raw material perspective over the last 24 to 30 months, pretty much for the world, but especially for us, because, I mean, if you look at our gross margin vis-a-vis 2 years ago, it's not a decrease of, 100, 200, 400 basis points. We're talking of 800 to 1200, 8 to 12% of sales. And that's been unnatural. And obviously, we haven't passed all of it on. The good thing is we're now pretty much seeing light at the end of the tunnel. We're now buying in raw materials what we believe are the correct prices. We believe our decision to take pricing only at 75% of inflation was the correct decision, because inflation has moderated, and therefore we don't even have to do a fair amount of price reduction because we didn't take price up that much. And therefore, we look forward to the future with increased optimism.
All right. You've replaced cautious optimism with increased optimism, and you've spoken about that as well. Can you quantify the difference between cautious optimism and increased optimism?
See, cautious optimism there was optimism on the demand front and beginning to see raw material moderation. Increased optimism is demand remains robust in urban. We believe rural and semi-urban, with the kind of steps that are being taken, the crop, the monsoon, the money that is going to come in, will also start turning up. And raw materials, now it's real. The material that I'm consuming in January and February is at the right prices, and therefore increased optimism. Now it's not something that will happen in the future. It'll start happening from this quarter itself.
All right, and final question then. Word on the street is that you are also tempted to enter the paint space in where everyone is excited about right now. I mean, you are 2 times the reach of the largest paint dealer. So, I mean, that should allow you to, use your brand, use your capex, etc., and your own Asian Paints experience from the past to look at this space. Is that correct?
We've always, we keep getting asked this question. Pidilite has always overlapped a fair bit with paints for a number of years. There are a lot of waterproofing products, waterproofing cum paint. For example, Dr. Fixit, the raincoat product for the exteriors, obviously competes against the paint company exterior products. This one has waterproofing and beauty. Most paint company products have only beauty. So we're no strangers to paint, but are we looking at some full-fledged, 4-plant, new 4 plants, big entry into paint? The answer is no. We've always said Pidilite is a disruptor. Pidilite is a pioneer. When we find ways of pioneering the market, those are segments we enter. And if you look at the number of pioneer categories, be it tile adhesives, be it tile grouts, be it exterior renders, be it flooring, we've got a whole retinue of stuff. In the next 12 months, Mangalam, you will see Pidilite launch 1 big and 3 small innovations in pretty much most of our divisions every 3 months.
All right. And Q4 is double-digit volume growth, right?
Right. Our obvious, this thing is, we've always said our core category should grow at 1 to 1.5 times GDP, growth at 2 to 4 times GDP, and Pioneer should become growth quickly. So yes, the moniker for us is high single digit, or for my internal teams, it is definitely double-digit volume growth.
Okay, so for the teams, they're looking at double-digit volume growth for the company. Well, that's an important interview. But now it's time for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here it is. When did Nirmala Sitharaman present her first budget? Your options are A, Feb 1st, 2018, 2019, July 5th, 2019, or Feb 1st, 2020. Send us your answers on Twitter. You can post your answer as a comment on the question tweet on CNBC TV18 News. Use the hashtag budget with CNBC TV18. Hurry and send us your answers. Remember, we'll announce the winner at 3 p.m. today.